Welcome to the weekly rate update. I'm Craig Fuller with John Paul Hampstead. Right here from Freight Alley. It is Labor Day weekend, so it's going to be a long weekend. I can tell you personally, I'm really excited that it's here.
Yeah, no, I'm actually supposed to go to Tybee Island in Georgia, which...
Where is that? Is that off Savannah?
It's right south of Savannah, just on the edge of the tropical storm force.
It's no longer a storm, it's a hurricane.
Well, I'm talking about the level of winds that are expected to hit up there. So we're a couple hundred miles out, have a 3-year-old in tow. Things could get interesting.
Are you going to go?
Oh, yeah.
Okay.
Yeah.
We talked about where rates have been, where rates are headed. But I think with the hurricane, because that is it's a black swan event. I mean, it's an event that happens every year. The black swan nature is you don't know when or where it's going to hit.
And you don't know how severe the impact is going to be to supply chains and the kinds of freight and the amount of freight and the duration of freight demand that event will generate.
Yeah, so first thing, I think safety is important. We hope that the drivers that are driving in relief supplies, as well as the folks in Florida, are able to get out safely.
Right.
And listen to the public announcements and stuff.
And people that want to work the relief effort need to be prepared. They need to bring supplies with them. They need to be prepared to camp out in places that aren't very hospitable, waiting for information.
It's boring too. They will miss the weekly rate update because there is no internet. But we should talk a little bit about what the hurricane is likely to do to the market. The market's been pretty healthy, or relative to where we had been. It has been healthier. What are you hearing up until the hurricane? So we'll qualify the statement to say everything really is off the table on the East Coast because of the hurricane.
Right.
But we'd love to hear what you're seeing or hearing about before the hurricane.
So in general, it's a good story. It's a story about gaining momentum. So volumes are continuing to rise as much as 1.5% to 2% just yesterday over the prior day. We're seeing a
So in terms of volumes are rising 1.5% over the day before.
Yeah.
So we're seeing acceleration.
Oh yeah, yeah.
And it is an acceleration to Labor Day. I mean, you always have a pickup. But what I think has been most interesting about this cycle is that even compared to last year and the year before, is we're seeing surges happen at the end of this month, in middle of August, which is sort of unusual.
Yeah, surges in weird, like pockets of softness in places where we'd expect to have a lot of freight, and weird surges in places that are usually kind of in down trough periods. Capacity overall is continuing to improve, meaning tightening. So we're seeing tender rejections.
It's improving for the carriers. It's not improving for shippers.
Not improving for shippers.
Or brokers, for that matter.
I would say it's still improving for brokers. Brokers want to have a sweet spot where
they want to have a little tightness, right? They don't want things so loose.
They want to be able to charge for their services.
Yeah.
They don't want to get in a bidding war.
Right.
So, we're getting a national tender rejection rate of around 5%, still very low, but up from the 3% range we were at before.
It's almost 65, 70%.
Yeah,
I'll take it.
Yeah, so that's
and that
going
was
well.
3% was really earlier this month, right? In early August, and it was it was the tender rejection at the end of July was also relatively soft. We have seen volumes move up. So the good news is volumes moved, and now tender rejections are moving up, likely because there's now enough volume to soak up the excess capacity in the market.
Yeah, and like I said, the capacity situation is continuing to improve, right? I mean, we saw the 2 bankruptcies
just yesterday.
Yeah.
So when this show goes out on Friday, we're here today because of the holiday on Thursday. The bankruptcies actually happened on Wednesday. We woke up to one that was 350 trucks, 340 trucks. That afternoon, I actually thought when I saw the second article come out, and I saw someone else, Chad Baldwin actually wrote this as well. He deleted it. I had actually read it, and I'm like, oh, that's another bankruptcy, or the same bankruptcy, but it was actually a different bankruptcy.
Right, another 100 trucks went out.
Yeah.
So those are anecdotal. There's 2 ways to look at it. Yeah, you can kind of drill down and see the specific reasons that the ownership is citing as to why they're shutting down, whether it's wages, insurance, can't get freight, whatever. But the point is that these are further data points on this trend of capacity continuing to leave the market.
The market's bloody, as we've said, and that, regardless of what the volume's doing and tender rejections are doing, the thing about viability of the market and think about financial profit of trucking is that you don't get back your losses. Like the time, you can't earn back the time that you lost, is you can only go in every day. You're basically, you start every day or every week or every month, you start it fresh. And you're either gonna do well that month or not, and you can't get it back if you lose it.
You can't.
And so those losses end up getting put into, you end up draining your working capital, and they end up becoming cumulative over time, which is why you can be at the end of a cycle and an up cycle, and you can still have bankruptcies at the same time, which is likely what I think's happened.
Yeah, I think we'll continue to see exits even after the market has sort of, we've called an upturn in the market, but I think even after that's undeniable, we'll still see a few exits just because of those accumulated losses.
Yep, absolutely.
And eventually, cash just keeps shrinking and you can't keep up.
Well, cash flow shrinking. I mean, I'm hearing banks are starting to put pressure on lending. I've actually heard that some carriers, particularly small guys, are just simply handing the keys over to the lenders. They're not even foreclosing. They're saying, here are the keys. I mean, you hear things like that. I don't have a ton of data to support that that's happening, but I do hear stories from some of the dealers that they're actually seeing that take place.
So in terms of rates, I think two interesting data points. One is that Chicago to Atlanta has really been the best performing lane this month. We've seen spot rates from Chicago to Atlanta go from about $1.55 a mile to $1.78 a mile,
real strong,
which is really strong movement for August. On the other hand, LA to Dallas, maybe some slight moderation in expectation for that lane. That's been kind of, LA to Dallas is always the most volatile major lane. It's been kind of buffeted by a lot of uncertainty around tariffs and how that distorts volume patterns. But over the past 7 days, we've seen the forward curve just kind of come down incrementally.
Yeah, I think the reason LA to Dallas is not seeing huge surges is because really fundamentally what happened is that you would start to see it trickle off, and it really comes in about September-ish, when mid-September. But what we're seeing is that lane has a lot of intermodal business, has a lot of port-driven business, and really the ports have been bringing in so much freight over the past year, and a lot of that freight has been in warehouses in Southern California, and then over the last couple of months, when things have been soft, they've been pushing it out to other warehouses around the country. So we're not seeing sort of that massive surge of imports that you would expect to see.
The other thing, too, has to do with the flow of information in the market, right? So everyone knows that LA has a lot of freight. It tends to be oversaturated with capacity.
Yep.
So even, so trucks go down there. You look at the rail data, you see that all the class 1s are shedding intermodal volumes. That's going onto trucks. So we actually heard recently that Union Pacific and CSX may be trying to rebuild some of those interline services.
Can they get it back? I mean, once you lose the intermodal, so they exited some of the interline.
Yeah, they shut down a lot of intermodal business.
Progressive railroading. Was that a function of progressive railroading? Or?
Yeah, it's precision scheduled railroading.
Sorry, not progressive.
Yeah. Essentially, if you can't double stack intermodal, you can't make money at it.
Right.
So they shut down a lot of the lines where they couldn't do that. They really tried to shrink the lanes and the capacity so they could charge more and try to get a kind of a sustainable rate. And Union Pacific, CSX ended a lot of their interline services, basically, which really reduces the value proposition for intermodal shippers. Right? Trucks can go across country, railroads can't unless they do interline.
But they can get it back, right? Once shippers rethink their supply chain strategy and their freight strategy, oftentimes that volume does not return.
That's what we're hearing from, got a little bit of reporting. So, these intermodal sales guys are kind of saying, hey, once the shippers leave, they don't come back. It's hard to trust capacity.
This has been the story of the intermodal trucking shipper, is that if you go back to the mid-2000s, so the early 2000s, a lot of the railroads shifted into intermodal, replaced a lot of that lost demand on the commodity side, because it was all of a sudden there was this massive amount of demand, and you had companies like Hunt, Schneider, and Swift, and Werner, and U.S. Express was also there, putting on like TOFC and putting on really pushing intermodal products, because the delta, they didn't have to worry about drivers, and the price deltas were very favorable for those types of activities. The railroads ended up, whether it was not making money or not making enough money, ended up realizing that they could increase the price, and they ended up basically overcorrecting. What they did was they actually hurt the ability for trucking companies that didn't have stacked containers and were using TOFC. They ended up hurting their ability to actually compete in intermodal. And a lot of the intermodal companies, a lot of the trucking companies that had TOFC ended up leaving the intermodal business and have effectively exited it forever.
Right, and so the mix of trailers and versus containers continues to move. Basically trailers are going away.
Yeah, TOFC's out, it's all container, a stacked car. But I think the lesson from that is it's very difficult if you're any type of shipper or a carrier or a broker or whatever, and you're doing modal shift into intermodal, and then the economics are not favorable, or the railroads shift, and they sort of have this, we're not, this is this is the way we're going to do it. It's very hard to go back and rebuild that, because you don't know, because you got significant amount of investment. You have capital investment in boxes, you have capital investment in trailers, or capital investment in an infrastructure networks to build these intermodal operations. If the railroads have a ton of control of your destiny, if they end up doing something that disrupts your competitive ability there, once they do that to you, whether it's once, twice, 3 times, it's very hard for them to earn that business back. So I think while I applaud the move by CSX and is it NS?
Union Pacific.
Union Pacific. While I applaud it, I think it's good. It might take a couple of cycles and a couple of years before they restore trust among shipping community to actually get that volume back.
And I think they really still have to get intermodal pricing right, and they have to adjust it to the market as quickly as paper rates in trucking and spot rates in trucking move.
They got to be much more progressive. They're just not.
If you look at the rates right now, they are in the same ballpark in terms of dollars per mile as trucking spot rates. Now you got to adjust both of those numbers, right? So spot rates, not necessarily what the shipper's paying. The shipper's probably paying a little bit more than that to the broker. But on the other side, for the intermodal, you've got to add drayage costs on both sides.
Exactly.
So I think it's kind of a wash.
And you got to have network. It's not just about the cost. It's the service elements, and it's the network you have to support that. Because you can't just, you got the boxes, so it impacts your trailer pool ratios, your boxes ratio. You either have containers or TOFC, and then you got to have dray. And you got to figure out chassis and dray, which is an important element too. And sometimes the chassis are not interchangeable, as we know.
And so after a couple quarters of really losing a lot of intermodal business, it looks like the railroads are trying to take the first steps to restore that. I think it's too little too late for this year.
Yeah.
And for this
so let's
peak cycle.
Let's wrap this up, because we're about out of time, as I can see on the clock. Tell me, JP, this hurricane that's coming.
Yeah.
I think that's going to be the X factor over the holiday weekend, and take us into next week. I think it's if the hurricane right now, they're saying it's a Cat 3, will hit landfall.
Now, and they've actually just upgraded
well,
to Cat 4.
There was discussions about it. Yeah. Is that official? Has that made it?
I don't know if it's official.
We don't know what's going to hit. It's still a couple days out. We're still about 4 days out.
Right.
But regardless of it, if it does get bigger and becomes a much bigger storm, that's going to create chaos for the freight market, at least on the eastern half of the country. Certainly anything east of I-35, even in the Northeast, is going to be disrupted, because what happens is so many trucks end up doing relief supplies.
And they get tied up for a long time.
They get tied up for a long time.
It's not like sending a normal load into Florida.
That's right.
You get your truck back in a day.
That's right. And it surges, and all the major carriers start allocating capacity. Their biggest shippers, whether it's the big box retailers or companies that are doing providing relief supplies like Georgia Pacific or even Energizer and Duracell that provide batteries for flashlights, or Nestle Water or whomever, Walmart, they need so many supplies, and they start dependent upon their core carriers and they say, hey, we need surge, and they're willing to pay for it. And they're willing to pay for it because they want to ensure that they're a responsible party. And I think carriers, not only are they disrupting their networks, but they're they're responding to this, and I think what that does is throws the entire capacity map out of the picture.
I mean,
if it goes on for a long time, if we end up seeing a significant weather event, we end up seeing significant damage, which I hope doesn't take place for the folks in Florida.
Right.
That will reverberate through the freight economy for months.
Yes.
It's not a short-term impact.
No, yeah. So we've heard that volumes are going into Florida from basically every region in the country except for the western 11 states, from Oklahoma and Texas through the Mid-Atlantic, all going into Florida. You were just talking about how normally LA sees spikes in container activity in September. If this lasts through the first couple weeks of September and a bunch of capacity gets soaked up into the southeast and Florida, it could affect it could affect trucking spot rates as far away as Los Angeles.
For sure, and it likely will, because oftentimes the spot capacities, it's effectively, it creates a honeypot scenario where all of a sudden there's one acceleration of demand, everybody knows it, they start flocking to it, and it drains all that incremental capacity out. So you could see firming of rates all over the country,
right.
Networks disrupted all over the country, and it will change how people think about it. And like I said, if there's significant damage
right.
to the state of Florida or wherever the storm hits, that could reverberate for months. And we've seen this before. This is not the first time we've seen the reverberation of rebuilding, because you got to remember that a hurricane's really, it has 3 lives, at least related to freight. You have the pre-run up, which is the prep, that's plywood in your windows and duct tape and getting bottled water and stuff to make sure you can survive the storm if you decide to get out. Your house and your property can survive. Then you have sort of the recovery, which is, you're bringing in bottled water because the water pumps are shut down or whatever.
Blankets, non-perishable food.
Exactly, Pop-Tarts.
And
then you have the rebuild, which is really a factor of how much damage is there, and
you get a rubble and debris taken out on flatbeds and dump trucks.
Oh, flatbeds will be, flatbeds have been it's been really tough for the flatbed sector this year, because construction has been so far off, and because there hasn't been as much speculation in the oil markets, which drives flatbed. I think if the storm is big and it creates a lot of damage, that could firm up the flatbed business and really create some opportunity for flatbed operators in the later part of the year. But we don't know. We don't know.
We don't know. A downside risk for trucking companies would be that if it damages a lot of citrus, that could hurt reefer for next year. I think even Irma had some negative effects.
It did, but I think one of the if there is a light at the end of the tunnel when it relates to these situations, is that Florida, with the exception of some agriculture commodities like citrus, is not a huge freight producer.
Right.
I mean, the advantage of a storm hitting, as it relates to demand, of hitting Florida, is that it's a huge consumption market. It's a backhaul market. If there was a backhaul market in the United States, Florida would be it.
Yeah.
That is the universe, and nobody wants to go to Miami, except maybe folks hauling flowers and stuff for certain times of the year. But if there's an advantage to that, then it's the fact that you wouldn't see any disruption of demand across the market. You would just see a lot of inbound product being moved. Right. And if they're under rebuilding contracts, then a lot of the time and empty miles gets taken out of the market. So the other thing that people don't commonly think about is that if there is a significant event that causes disruptions, then there actually could be a lot of employment for rebuilding and construction, and that actually takes a lot of the driver population away, because people end up making a lot more money rebuilding homes,
especially when it's being paid by insurance companies and the government rather than private real estate developers.
I think the greatest thing about living in the United States, and I hate paying taxes I'm not a fan of paying taxes, just don't like doing it, but I do it because I don't want to go to jail. But the greatest thing about living in America is that in situations like that is you live in a country that's very rich and will spend an enormous amount of money, particularly in Florida, where it's a huge voting population, to recover and repair. And so because of that, a lot of that money gets cycled into the economy, it gets cycled into the state economy, and then ultimately will end up in freight. So it very well could be a real big impact to freight demand for the later part of the year, but we don't know how big it's going to be. We won't know until next week.
Don't know how big it's going to be in the short term. I would say that any kind of uncertainty about the impact is going to play in favor of carriers and brokers.
For sure.
So, stay tuned.
Shippers are definitely going to be scrambling more so, as they always do, and it really is the big box guys. FEMA always gets sort of first right, because drivers don't have HOS, and everybody knows that the federal government will pay. Yep. And they'll pay attention. And then the second is you see these sort of secondary impacts of like Home Depot and Lowe's and Ace Hardware and Walmart and so forth that end up getting sort of that surge. And so you sort of see it. It's a big impact. It's an important story. I think safety is the key. By the time folks that watch this, well, certainly driver populations that are watching it should be thinking about safety and awareness. And we wish everybody a fantastic Labor Day. It's not only a lot going on in the freight market, it is a big football weekend. So I got to say, sick 'em Bears. Stephen F. Austin, we're coming for you. What
Go Blue.
Go Blue? You got, who are you guys playing?
I don't even know.
He doesn't know. He's not that big of a fan. Well, next week, JP, we'll be back, and we'll talk about the after effects of the storm and what that has meant to the freight market. Have a great weekend.